Hello guys, glad to have you on board again today. We'll just switch today, meaning that I will record the English version prior to the French version, just for some experience purposes only. Just try to figure out if that makes any difference, because some people among the community who are listening to both the French and the English podcast are basically saying, all right, Phil, you're much more dedicated to the subject when it goes to the English podcast, probably because you're recording them after making the French versions. So just to see if this hypothesis is either right or wrong, I'll just simply reverse, though today I'm going to record prior for the English community and then for the French one. So if you notice some changes, obviously I'll be happy to have some feedback and stuff like that. Anyway, we're just going to keep it the way it is. We're Tuesday, which means beginners podcast. We're going to stick to the classical stuff in here, easy trades. When I say easy, I say easily manageable type of trades. All right, doesn't require a lot of knowledge. You don't have to understand a lot of patterns. Just, all right, stick to the essentials. Try to figure out areas in which the market is hesitating and neutralized the ranging context, and trying to profit from them pure and simply. You know the process. First, you need to master the easiest possible range with the highest level of chaos management, which means the range, neutral range type of scenarios. You get in with a risk-reward ratio, you get out where the risk-reward ratio just shrinks, and you basically just try to profit from the in-between. Doesn't even try to figure out where the fuck the market will go. Don't try to understand, don't try to put it in a bigger picture context and stuff like that. Just easy get in, get out. Just to learn that trading is all about chaos. Why do we start with the range? All right. Now we're going to do a little bit of psychology in here. Why do I give you guys this thing as a starting point in trading? Well, like I said, the range is generally counterintuitive, which means that's the thing you generally guys think is the worst thing to start with, because it's complicated, it's chaotic, and you basically don't understand anything in here. So it's scary, complex, and obviously, like I said, you definitely don't want to go down this road. You want something easy, understandable, and you certainly don't like chaos, right? That's normal. Like I said, it's counterintuitive. So trading ranges is what you should normally hate or feel like absolutely unnatural. That's what you need to start with for multiple reasons. Like I said, fighting chaos is purely stupid. You're going to have to let it go with that stupid ID. It's certainly not going to lead you anywhere but circling around the same old problems. Try to understand what the hell's going on. I mean, god damn it, you're never going to understand neither, so drop that ID as well. And complex, oh, sorry, but trading isn't easy. You really thought it was that simple? Then you should have gone to, I don't know, going casino betting or something like that. But in here, we're not necessarily playing with gambling stuff. We're more likely trying to turn it into a job. And that makes it a little bit more complicated, obviously. So, starting with the ranges, even though it's complicated, how do we manage complicity in the ranges? We basically profit from risk-reward ratio. Just like I told you, there are just a couple trades in a range, and if you try to make more than that, then you're generally just going to lose what you gained previously. And you totally erase the statistical positive returns that you can have if you just follow the guidelines. So, trading ranges, even though it's complex and whatever, just requires actually a lot of patience. And that is something you're going to have to work with. I mean, if you work with patience, you're generally going to get better at trading. So instead of trying to find something you can understand, trying to find something you can control because you don't like chaos, trying to find something that looks simple, then instead you understand that you might want to get into heavier level of complexity just because any fucking way, this is chaos, embrace it, don't fight it. Just make it manageable. The only way you can manage chaos, wait for interesting prices, and everything else, like the 95% of prices remaining in a range, you simply don't give a shit. And if you try to make sense of them, you're just going to overtrade. And you're going to see trades everywhere, like people in ranges trading triangles. I mean, god damn it, that doesn't even make sense. People trying trendline breakouts into a range. How stupid that is. So You don't do that kind of stuff. Ranges are simple. Risk-reward ratio is the only reliable thing that you can play over the long term that will always provide sustainable gains. That means even if you don't win this time, out of 10 trades, out of 100 trades, you always make money with that. The only thing in here is that if you overplay that rule, I mean if you're searching ranges where they're not, then this is where you destroy that positive return. All right? So we saw that earlier on the previous podcast, that you must make sure that you're not trading into the trend pullbacks, because that's the major cause for error in range searching process. So just make sure you're not in a pullback. Try to identify a market that's hesitating, that just made a market top, or is just drying out of liquidity and stuff, of volatility and stuff like that, and try to catch up these typical third range boundary. All right? And this trade is definitely the best way to get in for the reasons I just explained. The only thing you're going to have to work with to successfully trade a range is what you're going to have to learn anyway if you want to be a trader. These are the first step. Learn patience, learn how to manage chaos, learn how to build a plan, learn how to accept that things will generally not go according to that plan. All right? Like when you get in, you definitely expect the market to go straight line to your targets. Yes, sometimes it will happen, but most of the time, market will oscillate endlessly around your entry price, even sometimes go beyond, just to prove you right in the end. And if you can work yourself through this, you get your first tough lesson in trading. You'll never control shit. You'll never know where the prices will be. The only thing we'll do is just assessing the odds that the price will likely get there instead of getting there, and what happens in between is just price oscillation. Gamblers will try to profit from there, or short-term traders. It's most likely layers of time frames, and that's the second thing you need to understand. There are ranges everywhere, just on different time frames. There are trends everywhere as well, just on different time frames as well. Everything is all about ranges and trends, but on different layers out of a beautiful landscape. That's it. Or you can either try to enjoy the beautiful landscape, but moreover, try to focus on the layers, because that's what you can actually profit from. All right? So if you try to understand the big picture, like saying, all right, here we got a range, and then a range, and then a range, and scrolling all over scrolling through all those time frames, that doesn't nearly make sense. You're probably trying to understand what the hell's going on. Understanding is something you have to let go. All right? So let go and search for ranges. But that was a quick introduction, and I really wanted to state that all over again. So what you might look at, just when you take that market, what does that look like? All right? I would say, typically, this looks like a pullback on the higher time frame, and this is probably a final excess, but probably on a 4-hour context. So let's have a look at that. All right, no, that's not even a trend. All right, so we can see two sets of waves. So it's classical in here, typical range, first wave, second wave, and anytime we get to go over the context is where the market reverses. So we've gone over, we're trying to go over again. Next resistance is 13K, and we're very likely going to go there. This is probably where we'll find our final excessive market on this trending markets. All right, so this is a range set by two trending waves and an intermediate consolidation. All right, this consolidation hasn't gone through the support context, which means bulls are most likely in control in this range. So this is a heavy bullish range. We barely retraced 50% of this range before getting bullish again. So that's no big news. All right, we know that the market is crazy fucking bullish right now. At least we certainly don't want to be anything close to bearish. I would say it pretty much that way. I don't see any ounce of bullishness in this market, but I see just a market that certainly doesn't want to have bears in motion. So we're just fucking up the bears, and we'll see how high we can go before they enter again. So we're waiting for bears. That's exactly the kind of market we're in right now, though we're probably looking for a range boundary. All right, so let's figure out that range boundary. What could it be? All right, now we can see another range, an even bigger range in here, the false bullish impulse, the ugly sideways consolidations that we have in here, which is an extended flat consolidation, followed by the second bullish impulse we'll live in right now. All right, so we're drawing out of this. We're probably going to try testing that trend line. That's what we're doing right now anyway. So I said 13K is our next area. Can we overcome this resistance? Yes, I would say we can, because in here is where our consolidation was. It's an extended flat, so this consolidation is terminated. I don't think that this is the motive we're living right now. Otherwise, that will be the consolidation, but it's rarely going to be the case. I doubt it. I sincerely think that we had first bullish impulse, like an ugly, weird trending system, extended flat consolidation, and now we're making this system in here with a wave 1, 2, 3, 4, and we're making wave 5. So I think we're late stage on these things. We're searching for the end. So we're looking for a reversal trade. So when you identify that, you know that a range trade is down the corner for you, but certainly not immediately. All right? You wait for the reversal traders to catch the top. Once we've done that, and you certainly don't go along this way, you're trying to catch the pullback. So you know that on a daily time frame chart, you'll have something to do. No, on a daily, sorry. We need to figure out this trend. All right? So we need to find a context that highlight this trend. Like we said, 4 hour is somehow weird, and yeah, that's not enough for the 4 hour. I think 1 hour is going to be your thing. So 1 hour seems to be the most appropriate context. So what do? Remember that there's one rule that should be repeated throughout your mindset as your typical range trade seeking process. Look for anything that looks for an end. All right, the final stages of a trend or something like that. Even if you get it wrong, normally you should be fine. That's the thing with the range trade, because you don't try to catch the reversal. So let's assume this is nearing its end, which actually is. Try to identify the area in which the market is likely to reverse and wait for the market to provide reversal signals. Do you see any reversal signals in here? Nothing. So for now, probably going to have to let it go, right? Not sufficient enough information to forecast this market to be about to reverse. So you wait. Anyway, you're not going to try catching that reversal. So for now, the only thing you do is waiting for the market to reach out to the support context. So either we do it right here, right now, without giving any pre-signal, and that will be probably the sign for an excessive, for a final excess reaching out to this area, or, like I said, we're just going to dry out in here, make our final excess in here, and then reverse, which I tend to believe is the very most likely scenario right now. I expect us to, following on from today and the next few days, we're going to have the Fed tomorrow. It's tomorrow. No, god damn it, when's the Fed? Just don't want to bullshit. Fed is, I think Fed's tomorrow. God damn it. I don't want all those events. I just want the big ones. What the hell is that? Now we can't filter anymore? What the fuck is wrong with that? No. Shit. No way! Oh, god damn it. Don't need Japan. No, South Africa. And France, no. Alright. And only a high importance. Then what the fuck? And I say high importance, I don't want the intermediate one, god damn it. Something's wrong with them. Anyway, so where's the freaking Fed? Yeah, it's tomorrow. Alright. So as the Fed will roll over tomorrow, the thing is that probably a market top will be built. I don't know why. Well, I can't explain that. But I mean, that's experience in here. So now anyway, we're dealing with central banking. So the central bankers make the dips, they make the tops, they make everything. So it's all about that. So either the Fed will cause the massive aspiration to the upside and will basically blow up every resistance in the meantime, or the Fed will build the market top. The market is therefore waiting for this to happen. So no sellers. We're just trying to rise as high as we can on every stupid asset and illiquid asset before obviously profit taking prior to the Fed. meaning that the sellers are probably waiting for tomorrow, or at least waiting for tomorrow's timing to play. So we'll wait and see about that. Either today they're all profit taken and we have a freakingly down day, which I still tend to doubt. Otherwise, we just consolidate today, try to push tomorrow with the Fed, and then we'll look for this. Anyway, this is none of your concern. All you care about is doing this, catching the pullback. Remember that you have to go there, reverse this area, the trend channel must be reversed, and when it is, you're going to try catching the pullback. Remember that the pullback we have in here for the third range boundary must have a particular way. Like, don't try to catch the V-sharp stuff, all right? When the market is brutally reversing in a single straight line in here, generally not the good type of trades you're going to take. Just giving you a trader's tip in here. The typical way of doing it is just like that, when you really have an intermediate way. It doesn't necessarily have to retrace deeply, all right? Just you need to see one trend line in here being broken down. Let me give you an example. All right, this, for example, you can see a trend line would have been built in here and it's broken. All right, so figuring out, like, when we're pullbacking, let's assume we've made a market top in here, we consolidate with a bearish wave. This is typically the type of range trade you would take. All right, like, first wave, we break down the trend line, we make a second impulse, and when we break it down is where you get to take your reversal. Obviously with the 76% Fibonacci, you know the drill, all right? But that's the two sets of wave typical third range boundary that you're going to try catching up. Why is that? Simply, I can't explain that. But there's a figure in the market that tends to say that when we're ranging, we're generally going by two sets of waves, or by sets of two waves, all right? And I can't really explain that. I mean, some people may say Elliott wave figured it out any fucking way. Yeah, probably. I mean, Elliott wave is more or less explaining some of the stuff that most traders know about. It's just put it in some guidelines, rules, and stuff like that. Like, I don't really like Elliott wave traders because they try to understand the market most of the time, and that's just an illusion. Because yes, Elliott wave have some good stuff in here, and certainly some quality information. But people tend to search for the key, search for understanding. Therefore, they're just losing themselves into the crazy endless details there is into Elliott wave theory. So I've made a video regarding Elliott wave, basically extracting what's important in the information as a positive trading information and what's the bullshit. Like I said, most of this Elliott wave theory is just crap, but there's just a little few rules, really important rules that are really making a lot of sense, and that's it. So cut the crap with Elliott wave, just pick the best, leave the rest for the stupid ones. And the crap in Elliott wave is most likely trying to make sense out of ranges. So just learn one thing: ranges are complex, and the core rule is that generally, anyway, the most probable structure within ranges is sets of two waves. So when you see two waves reaching out to an interesting risk-reward ratio, typically the 76% fib, or the 61% when the range is tainted, either bullish or bearish, then you generally don't want to miss those trades. So that's what you guys need to learn about ranges. Don't focus on the triangle or multiple A, B, C, double YX double structures. This is most likely bullshit. Or just figure out one thing: ranges are complex. Embrace that and move to something else. All right. So anyway, that being said, I'm going to try searching for a range that is nearing completion, but obviously we're not going to find any such thing in the indices right now. They're all looking for a market top, so just let them build it. And in the meantime, what could we find as a viable range? I think Shanghai, yes. Oh, there you had a beautiful range. All right. So it's too late on this one, but damn it. You see, even before the indicator plotted it, I saw this signal in here. So this is a typical type of range that you're going to try to get. Market moves up, builds a reversal, pulls back. Even though this one is pretty violent, yeah, I would say this one is a pure counterexample of what I just said before. This is typically the kind of trades that, if you take them, really take them cautiously, because in here you really have a strong reactivation. And when those things happen, generally, either you take a tinier position sizing and stuff like that, but that should ring a bell. Market is going from oversold territory right to overbought. Well, that works out for a triangle, obviously, but don't be too optimistic with those things. Let's find another stuff. Little VIX, you can't trade that. Oh, cryptos, obviously. This is where we're going to have a beautiful range. In here, you clearly had the 15-minute range I was talking to you about. Did we get the 76% fib? No, we got 61 in here. Oh, the context didn't reverse. That's weird. All right. That's weird we didn't reverse it. How much time? That's really, really weird. All right, so we're just getting started with the range. I think it's a little bit too late to catch it right now. We got 61% retracement, 61 in here as well. So yeah, it looks like a triangle, but it's too late. So you could have caught this one, but the market context has been a little bit too slow to catch the reversal in here. Even though we dipped how many fucking times into the context? 1, 2. I'm trying to count down how much context boxes have been. 2, 3, 4, 5, 6, 7, 8. Every time we just rolled ourselves over the support context. So yeah, that's weird. Normally the support context must reverse in those cases. So in here you probably had a bearish range context, which ended up like a triangle. So triangles anyway are the ugliest thing to highlight with indicators. So when ranges will look like triangle, most of the time either you'll miss them because they're really complex to figure out, and in here the timing is really ugly. So anyway, we had a range, but you couldn't catch this one. Or eventually you could have caught it into 3 minutes. Let's see if it was doable. I think it was a little bit harsh anyway. Alright, support context, resistance context, 1 time, 2 times. No, we never reached out 76% fib in here. Yeah, we reached out in here, but it didn't follow the guidelines. So no, there was nothing you could catch with the Bitcoin. Eventually Ethereum. Let's try to figure out if this one gave you a range signal. No, I don't think so. Oh yeah, it gave you a bearish range signal. As you can see, this is exactly what Bitcoin should have done, right? Like getting in here, reversing the support context, giving you the bearish range signal. And as you can see in here, the market is now neutralizing in ETH as well, so very likely a triangle, continuation triangle type of trade. So right now we're waiting for further informations in all those cryptos, but they still remain somehow, in my personal vision, positively tainted. What I see right here is pretty positive. Still a lot too early to figure this out. So, but I think there is a little bit more upward potential. And from what I can see right here, right now, all right. Remember that the multiple options we had on cryptos for swing traders were either we're going to look for this area, or we're going to look for this one. All right. I still tend to believe that we can hardly give any reliable answer so far, but this triangle continuation pretty much looks like we're likely going to go this area. I would say 55% to 45% chances. All right. It's still significantly not enough. It's still not, certainly not enough to go for a trade. All right. So patience still required. God damn it! I'm gonna find a range. Oh, USD GPY. Are we gonna have that fucking reversal or not? Still not. We're waiting for something to happen. Probably the Fed. Shit. I might find a range. So we're gonna go short term anyway to find one. Let's try to go DAX index, trying to find a range pullback today on shorter time frames. I think that's something we can deal with. Come on. What? Too many candles in history. What the fuck is wrong with this thing? Jesus Christ. Oh, damn it. I've done something wrong. I'm going to have to goddamn highlight that. You see, so many bugs with that freaking framework update. So I'm going to have to delay it one more time. It's way too much crap with that new code and stuff like that, so I'm really gonna have to figure out like this type of error. I suddenly don't scroll back for 10 fucking thousand bars, so don't know what the hell's wrong with them. That's probably this shitty algorithm in here seeking for the targets. I mean, I'm struggling like hell for this indicator, for these targets. So anyway, in the meantime, we're gonna use that. So as you can see, context going down. So in here, you're gonna have your range pullback, I think. All right, now we're reaching out for some support. I think the DAX will likely find it sooner or later. You wait for 2 sets of waves, and you look forward for your pullback. 76% fib typically. So in here, it's a little bit too early. Like the market needs to reverse first for the Fibonacci's to update, but you can do your updates on your own. Like if you want to anticipate, you can still manually plot the indicators, the Fibonacci's. So obviously you update as we go lower, right? If let's assume this is a reversal, so let's just anticipate. Right? This is the area in which you're going to look for your trades. Here is for bearish range context. As you can see, we're clearly installing a lot of candles in here below the context. So 61% retracement might be tradable. All right. So you will have a look at the 61% fib, see if you have trending signals on momentum, and if you're dealing with the resistant context, not above. All right. So for now, that's what I would recommend to do. Waiting for those things to eventually show up in the future. So right now is a little bit too early, but this is a typical range you want gonna look like. Or eventually 76% fib, classical stuff with usual exhaustion signals and stuff like that. All right, but here is a typical range context you could profit from. We still have a context though, so we just need to have a look at the 15-minute first. All right, this is where you're going to have your range. It's not going to be 3 minutes, it's going to be 15 minutes. So you wait for the context in here to be reversed, wait for 2 sets of waves, and you're going to try catching up the resistant context afterwards when it will do its job. All right, so this is 15-minute range context to deal with for the German DAX, which is the appropriate time frame for the range signals for you. All right, not now, later on. And remember that we're going to have to make sure this is not a range, this is not a pullback, which I sincerely think could be the case in here. So if you get to take this trade, be aware that if you see pullback signals in here, which we tend to see, have a look at this, 23% Fibonacci, trending signals. So this very much looks like a pullback trade. So be safe and cautious on these ones. All right. If we reverse just like that, it's not good. We need to go lower than that. All right. If we reverse out of the Fibonacci, you know what that means. We're likely going to go higher afterwards. All right. So no reversal here. We need to dip lower than that. Then try to catch the 76. All right. That's gonna be it for today. I don't see any reasons to go any further, so I wish you guys a pleasant day. You let me know about your feedback. Not in here, I don't have a look at the comments on YouTube. You can let us know either to the moderators or anything like that through Discord, but I don't think there's any changes regarding what I said today. Bye guys.